Welcome back. Bansal Wire is the company on our radar right now. The stock is currently at 370. Remember, it's a recent listing. It listed only on the 10th of July. That's less than about a month back. The issue price was 256. So from that level, the stock price has gained close to about 44%. Now, they came out with their Q1 numbers, and it looks like a good set of numbers. A revenue growth of 49% and a profit jump of 82% on a year-on-year basis. This is a company which manufactures stainless steel wires and steel wires. It's a manufacturing company. Pranav Bansal, MD and CEO of the company, is now with us on the show. Pranav, morning. This is Reema here. First, if you could just break up this top line growth of 49% in terms of volume as well as pricing growth.
So for the whole quarter, I would say majority of this growth has come from volume. While there has been some increase in the pricing as well because of commodity pricing, but I would say about maybe 5-7% of it would be because of prices. A majority is because of volume. Because our new plant is ramping up, so that's the main area where we've seen our growth coming from.
Okay, so with the new plant coming on stream, can you expect this 40% plus kind of volume growth to sustain for the next 2 or 3 quarters?
Well, I would in fact say this is only a start. The future for this year as well is brighter than this quarter because we've just ramped up our production. It has only reached to a 5-10% capacity utilization for the new plant. Within this year, we would be able to increase our capacity by up to 2.5 times of what it was last year. So with that kind of ramp up as well, we are looking at better numbers, in fact, for the whole year.
So can you take us through this capacity utilization ramp up? Say in Q1, it was only about 5-10%, and we saw this volume growth. By Q2, Q3, Q4, what would the capacity utilization ramp up to? And therefore, what can be the incremental volumes and revenue growth?
So I would say the main thing here is about the expansion. So today we are at about 2.5 lakh tons a year capacity, and now with this current expansion, we are adding 3.5 lakh tons. So by end of this year, as far as capacity goes, we will be at 6 lakh tons. Therefore, the scope for us is more than 2 times. Whereas capacity is concerned. Even in ramping up, I would say we are expecting to fully utilize the capacity within the next 2 to 3 years. And majority of it you will see within this year.
Pranav, hi. I remember last time when you were in and we were having a conversation, you were still in IPO mode, so we couldn't press you on too many numbers. Now that you have this whole capex plan at play, just give us the revenue projection. I mean, what does this translate into in terms of FY25 revenue growth and then the revenue target for FY26 as the capacity comes on stream?
So, ma'am, in our business model, the first thing is that revenue is not really something that tells you what you've done. It is more about the EBITDA growth, because at the end, everything depends on volume. And because we have a cost-plus model, our EBITDA remains the same. Now, when we talk about that, I would say as a company, we've grown at 20-25% every year. With the recent public issue and this being a completely fresh issue, we are targeting something a little higher, whether it is this year or the next 5 years.
No. So Pranav, just allow me to understand. Your top line has been flat. I mean, FY23, 24, you were around 2,400. So it'll help. While we always look at EBITDA, of course, but a top line projection also helps, especially because you're adding more capacity on stream, right? So that volume should translate to and you've got a price increase this quarter. It should translate to a higher top line. And then give us the margin picture as well, because margins have improved this quarter quite a bit. So is this 7% kind of a level sustainable? Full year, targets for revenue, EBITDA and margin?
So I would say as far as this quarter goes, wherein we have done about 800 crores of revenue and 60 crores of EBITDA. In the coming quarters, this will only improve, whether it is revenue or EBITDA. In both numbers, we will see a good increase each and every quarter. By the end of this year, I would say we are looking at anywhere between 33,000 plus kind of a revenue. And similarly, EBITDA also, there will be a good jump.
Okay. Earlier you told us that you will be focusing a lot on the, I think the high carbon segment, if I remember correctly, basically where the margins are higher. So can you just give us the product mix split at the end of Q1 and where you think you'll be by the end of the year?
Sorry, can you say that again?
The product mix split at the end of Q1, just trying to understand how much is it high carbon sales and how much is it low carbon, because you explained to us that high carbon, I think, is where the margins are higher.
Yeah. So I would say in totality, high carbon out of the total volume would be about 30%, close to 30%. And this is what we're looking at for the future as well. In fact, the fourth vertical, which is specialty wire, is also set to start within this financial year, and which will see main capacity coming next year as well, because of which we will also be able to expand our margins in the future.
Okay. All right, Pranav, we will have to leave it on that note for now. Shorter conversation, but we'll look forward to the next one as well. Good luck with the plans for the rest of the year. That is Bansal Wire, recent listing, and the first quarter has been quite well for the company. Stock is holding up about 0.5%. Let's take a quick break. We'll come back on the other side and get you more on the markets.